Hello and welcome to another update video about MATIC. MATIC has made some serious progress in its fifth wave to the upside. It probably completed the fourth wave by now, because the thing is, if we now extend the fourth wave, and I still have it down there with a question mark, so if it still extends its fourth wave, it would get quite massive. It would grow quite massive, that fourth wave. Technically possible, as I've been highlighting to you for, well, for more than a month, for a month roughly, for a month, since this decline began and the third wave actually topped and we had a break. I think it was the 90-cent level or so, which told us that most likely the third wave has topped, and that the fourth wave is underway, which was an early signal. And then it was confirmed, I can't remember where it was exactly then confirmed, but we had early indications that the third wave had topped. I've been telling you that the 64-65 cent level is really the key support for this yellow wave pattern, which is my primary scenario. Again, also for anybody who's new here, we're still tracking primarily a bullish scenario for MATIC. We're tracking primarily this leading diagonal structure here that should still give us another high, basically another fifth wave to the upside on the chart. Nothing new for anybody who's been watching these videos for a while. The price is back at 90 cents. Okay, so we're basically round about there where we had the confirmation of that fourth wave pullback. However, within an overall uptrend, most likely this will really only be, probabilities will really only get very clear on this chart, or much clearer, once we have all 5 waves complete and the subsequent 3-wave pullback. But that depends on your personal preference. If you wait for confirmation, or do you rather like to see reward and risk in a very favorable ratio, so, and to make your trades based on reward and risk. Some people like more confirmation, some people less. That really is a very personal decision, and therefore there is no right or wrong when it comes to trading and making entries and exits. Just make sure that it's in line with your trading plan and risk profile, which is unique to everybody. But anyway, it was a nice swing trade potentially for anybody who used the support area. Since even if I just measure from the top of our support area, the price is now like 20% up in a very short period. Now we see a bit of a pullback. It's technically possible that this C wave has topped now, So we have 3 waves up, as you can clearly see. Wave A is an ABC structure itself, shallow B wave, and possibly here the C wave, but that can still extend. Just highlighting now, okay, what would be support for the B wave? Well, it's certainly to maintain the idea that the fifth wave is unfolding, the price should hold above the 78 cent level. It's this swing low that really needs to hold, because that would be the invalidation point, okay? So what I would have to assume is that below 78 cents, the price will dip into the orange support area and then has another chance to restart and it will reset the wave 4 and may then restart the wave 5 a little later. But ideally, this is it. Ideally, the wave 4 bottomed here already when it made the first attempt in our support area. Also, obviously, we've got this trend channel. So preferred would be at some point, to finish this A wave, move down on a B wave, find support at this ascending trend line, and then continue to move up in wave C. And we've got key Fibonacci levels to watch at $1.11, $1.25. Obviously, also here, that third wave top is a structural resistance point around 98 cents. Bear in mind that the $1 level is key psychological resistance level as well. There is nothing really bearish here until we break below 64-65 cents. That would not strictly invalidate the yellow wave count, but it would make me increasingly uncomfortable about it. And I would then rather prefer the white wave count, which is currently only the alternative. The white count, by the way, would most likely send us back into the region between 50 and 41 cents. But at the moment, I'm following primarily the yellow wave structure. Now, really looking at the detail here, within that yellow wave A, circle wave A of circle wave 5, we can measure the ideal Fibonacci extension level. I'm not sure if I highlighted these to you in the last video. I might have. We talked about certainly the 90 cent level. That's the 1-to-1 ratio. possibly the 1.236. These are key levels for a C wave. So honestly, it would be ideal if it finishes this C wave somewhere here, but we'll see. You know, that's certainly nothing that is sort of tradable in my opinion. Let's say, you know, selling here, buying back here. That's sort of not, you know, not every wave structure is sort of really tradable. Well, you can scalp anything, you know, but, you know, from a video point of view, obviously, this is sort of not manageable. But obviously, because these movements can happen too quickly and things can change so quickly. But therefore, we have our support boxes on the chart. These can be used to measure your risk. For example, in a long trade setup, long trade situation, you knew that the support is 64 cents, but I highlighted to you as well that ideally the 70-cent level is holding because that's the more reliable one. So overall, from a diagonal point of view, MATIC did really well because this third wave is very much extended. That's good, that's solid, okay? It also didn't extend too much, so it extended to a degree where I say, I would trust this diagonal. Well, to a degree, you can never really fully trust diagonals, but I trust it to a degree. There are certain Fibonacci extensions that a third wave in a diagonal needs to reach to be sort of reliable as a diagonal can be, because they can be, they can turn very quickly into corrections and then go the other way, right? Because they are not impulses, so, you know. Anyway, so that was long enough, and the fourth wave did hold the 50% Fib level, so it's all good, you know. It's actually done what it needs to do, and now ideally we're in the fifth wave, and then we would be able to complete this fifth wave. And I'm talking about a target of $1.10 plus. I don't want to give a maximum target. You don't give maximum targets in crypto rallies. You can only give sort of ideal ranges, right? And so, I mean, the ideal range is, well, I'd say $1.10 to $1.25, maybe a little higher, but it gets very extended, that fifth wave, if we get to 145. Now, fifth waves in commodities get extended quite frequently, and sometimes in crypto rallies as well. Now, that's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.